So you're making an offer on a home and you're using a loan to do that. So you're always going to have to sign what's called the third party financing addendum. Let me share my screen with you really quickly so you can take a look at that document. All right, here we go. So what you see here is the first thing that we need to know is we need to know what type of loan you're going to be doing. This box right here, box A, that would be a conventional loan. Box B is a VA or veteran loan. And then the third box would be FHA loan. The VA loan and the FHA, those are the most common loans types that we use, are those three right there. The VA and the FHA loan are government-backed loans. And so the home is looked at a little more stringently on those because they are government-backed and government-guaranteed loans. There's things about the home that they're a lot stricter about than they would be on perhaps a conventional loan. The other thing you want to consider when you come down here and you're looking at this is paragraph number 2, where it asks if the buyer's approval is necessary or required to continue with the sale. And we're almost always going to check that it is. And then here we're going to put right here in this section the number of days we think that the lender will need to get that loan approved. If the contract was not subject to the loan approval, we would check this box here, but I've very rarely seen that ever checked. And then property approval. So I'm just going to read this real quick. If the buyer's lender determines that the property does not satisfy the lender's underwriting requirements for the loan, included but not limiting to appraisal, insurability, or lender required repairs, the buyer not later than 3 days before the closing date may terminate the contract. So basically what that's saying is, and the big one is appraisal, guys. That's the one that is always creating problems in the transaction. So if the home does not approve, so let's just say you offered $400,000 for the home, but it only appraised for $370,000. That means you're $30,000 short. The lender isn't going to cover that on the loan. You as the buyer would have to come out of pocket with that $30,000 cash, or we go back to the seller and renegotiate the terms of the contract. If we cannot come to an agreement, then the contract is then terminated. And at that point, you would be able to get your earnest money back because the home did not appraise. So that is a little bit about the third-party financing addendum. This is Linda Hardwick with the Hardwick Properties Group, powered by eXp Realty. We are fiercely focused on client satisfaction and here to answer any of your questions about the real estate transaction or the real estate market.